marquee message. This is where the king dollar will meet its funeral march. This will be where the Brics lay out all the different non-dollar payment methods.
So I think what we're seeing right now in silver with this congestive action in the low 30s is when you break out of this stuff, those two peaks at 50, historical low peaks, 1980, 2011, they're going out fast. Then likely silver's going to gush past those highs before it even pauses. And that'll, of course, wake up the world. You don't even have to look at a silver chart or a gold chart anymore. Just assume they're both going to go vertical. Only this time silver is going to vastly outpace gold.
The point I'm trying to make is once we get to a place where asset prices clear, the increase in purchasing power of gold and silver are going to be far greater than 99.9% of the people out there have even dreamed of. And I'm going to tell you, any projection that you've seen for the price of gold or the price of silver is going to be too low.
Too low. Yeah.
Any projection you've heard of already is too low.
Interpreting the wind, okay? That's what I try to do once in a while. It was last August, we had a Brics meeting in South Africa. They actually blocked President Xi of China and his delegation. They held him in a hotel. They did not want him at the Brics meeting to talk about social scoring for bank account access. Okay, that's the Brics. The Brics did not want the Chinese to dictate bank policy for social credit. Okay, that was a year ago. Okay, that's a preface. Then in June, the Russians took control. What do they call it? They're hosting the Brics meetings. So it was in St. Petersburg. So the St. Petersburg International Economic Forum, where they had 70 deals worth 23 billion. And contrast that with Davos, that had no deals, no contracts, no economic contracts, no nothing. That's not an economic forum. It's a banker forum. So St. Petersburg, Chris, they had some results. They announced an alpha test for mBridge. They announced enhancements for the mBridge protocol. They announced the unit, and they said that more development was going to be coming for the unit. And they said, look forward to the October meeting where we're going to have more announcements, more developments, more revelations, and more specifics. In the meantime, Russia announced that XRP is going to be the official intermediary between all their central banks, financial institutions, and banks, and all the other side, the merchants, and the ones that take payment for whatever product or service. So the Russians let it be known that XRP is going to be important to them. Now, I'm looking forward to Kazan in 2 weeks because we have been conditioned, we have been warned that a lot of details are coming in Kazan. A lot of details on payment systems, different options to operate under mBridge, maybe a lot of specifics and details and perhaps enhancement for Bridge, which is a payment system and not a protocol. We're probably going to get more details about the digital ledger and its usage and some of the features and just some of the volume. We're probably going to get more data on dumping treasury bonds and buying gold, more volume. We're probably going to get more details about the Brics development, the new development bank, NDB they're calling it. We may get more details about how they're going to fund the new development bank. Okay, these are all areas that I'm going to be devoting attention to. And, you know, when this meeting is over, I'm going to need to do my chapter on the Brics for the October report. And that's what I did back in June. Except back in June, it was like the 15th to the 17th. This is later in the month, so it's going to be a little more difficult to get a lot of information that's specific and confirmed about the Brics meeting. I think this is going to be a big splash, okay? And what I'm hearing, just like in a marquee message, this is where the king dollar will meet its funeral march. This will be where the Brics lay out all the different non-dollar payment methods. I think we're going to get a lot of momentum after October, where the dollar is going to be down below 50% on international payments.
Good evening, and welcome to the Economy Express channel, where we bring you the latest and most critical updates shaping the financial world. Tonight, we turn our focus to groundbreaking developments within the Brics Alliance, as renowned economist Jim Willie reveals monumental shifts in the global economic order. Investors, take note. This could be the turning point many have been anticipating. Let's begin with a fascinating insight into a power struggle that's been brewing within the Brics nations. According to Wilie, there has been resistance from key players within the alliance to China's push for integrating social credit systems into banking. This decision came to light during a Brics meeting where Chinese efforts to influence bank access through social scoring were firmly rejected. The alliance is clearly charting a course that prioritizes financial independence and decentralized systems, a major win for advocates of free market principles. Fast forward to June, when Russia took center stage as host of the St. Petersburg International Economic Forum. Unlike global summits like Davos, which failed to produce tangible economic agreements, Brics walked away with 70 deals valued at a staggering $23 billion. Wilie draws a sharp contrast here, pointing out that while Davos has become more of a bankers' forum, Brics delivered actionable economic results, signaling their growing influence on the world stage. One of the most striking announcements from the forum was Russia's adoption of XRP as a key intermediary for financial transactions. This digital asset will now connect central banks, financial institutions, and merchants, positioning itself as a vital component in Russia's financial ecosystem. For investors watching the rise of digital currencies, this move underscores the growing momentum behind decentralized payment systems. But the real game changer is still to come. Wilie highlights the upcoming October Brics meeting in Kazan as a critical moment to watch. The alliance is expected to unveil significant advancements in their bridge payment protocol, offer detailed strategies for their new development bank, and present further updates on their bold moves toward de-dollarization. According to Wilie, this could include plans to accelerate the dumping of U.S. Treasury bonds and increasing gold reserves, trends that should catch the attention of every savvy investor. And here's the headline that will make you sit up. Wilie predicts that by the end of October, the U.S. dollar's share of global trade payments will fall below 50%. That's right, below 50%. He refers to this moment as the funeral march for the king dollar, a term that underscores just how monumental these developments could be for the global economy. So, what does this mean for you, the investor? Jim Willie suggests that this is the time to prepare. Diversifying your portfolio into hard assets like gold and silver, or exploring emerging digital currencies might no longer be optional. It could be essential. Stay with us here at the Economy Express channel as we continue to track these transformative events. This is not just news. This is the financial future unfolding before our eyes. Back to you in the studio.
Market, the one holding the leash, didn't really drop much. But silver, like I'm going to jump off a cliff. Well, we made that low. It was Tuesday a week ago. We put out a report and said this is a bear trap. Do not pay attention to this day. At that point, we were down, just above 30, I think it was, in the 30s, low 30s, and it had been, above 32 and 33 even. So we'd had a sharp drop there. So again, the leash went the other way. But if you looked over at gold, it was steady. And what happened? Silver's now back up, pushing toward 32 now. Okay, so now when we measure the spread of silver versus gold, it's a ratio. We divide the price of silver into gold. And so we get a percent. So silver, if you go back 50 years and plot a bar graph chart, which we did in the weekend report, showing the peak silver to gold spread reading that year, you'll see that in that 50-year period, 21 of those years reached at least 2% level, where silver was 2% of the price of gold. In the 1980 bull market, when silver reached 50, that first time it ever did, it was up to 6.5% of the price of gold. And then it fell back down. And then in the 2011 peak, when silver again reached 50, gold was 1900, silver reached 3+% the price of gold. Silver right now is 1.189% or 1.19%, let's say, the price of gold. Is very cheap historically in relation to the price of gold. But when you measure the spread technically, week by week or even day by day, and create a momentum chart of it, you can even see it on the spread chart. You get up above 1.3% by much, and you're going to blow a cork. Meaning silver is going to outperform gold vastly. It's going to unleash technically. And again, we're just below 1.2% right now. And I think there's enough things just above 1.2 to drive you up to that 1.3+% level and trigger this bigger stuff. But if silver went to 2% of the price of gold, again, it's been at 2% 21 of the past 50 years. So it's hardly an excessive thing. And gold were even, just 3,000. Okay, 2% of 3,000, you do the math, okay? An all-time new high, $60, okay? And I don't think gold's going to 3,000. A lot of people have that as a working target, some major firms. I think gold's going, the next stopping point will be 3,200. And if silver happened to be 2% then, and the spread broke out, and by the way, when that spread breaks out, it is also a signal that the net price action of both metals is about to go vertical. It happened in 1979 to 80 when the spread exploded. Silver exploded. Gold exploded too, but silver led. And it happened in 2010, latter half of 2010, prior to the rush in silver by April of 2011, where it reached $50 again. The spread broke out. And sure enough, silver price unleashed at the same time, net-wise and versus gold. And we have the same pending situation right now, where if we break that spread out, you don't even have to look at a silver chart or a gold chart anymore. Just assume they're both going to go vertical. Only this time silver is going to vastly outpace gold. And it's got so much room to do so, to even get back to, quote, what you could call normal levels, that if gold were to go to, for instance, our next level that we think there might be a stumble or a pause is 3,200. Well, if silver reached 2%, we'd be $66.
We bring you a fascinating update from renowned economist Michael Oliver, who has issued a compelling forecast that silver may be on the verge of a dramatic breakout. If you're an investor in precious metals or someone keeping an eye on market trends, this is news you won't want to miss. Michael Oliver has analyzed the silver-to-gold ratio, a critical metric that measures the relative value of these two key metals. According to his findings, silver is vastly undervalued compared to gold and poised for a significant move upward. Let's dive deeper into his insights. In a recent market dip, silver prices briefly dropped, a movement Oliver refers to as a bear trap. He warned investors not to be misled by this temporary decline. And sure enough, silver has already rebounded, climbing back into the $32 range. But here's where it gets exciting. Oliver highlights that the current silver-to-gold ratio is at 1.19%, historically very low. Over the past 50 years, this ratio has reached or exceeded 2% in 21 different years, signaling that silver has plenty of room to rise. What does this mean for investors? Oliver predicts that if gold continues its upward trajectory and hits $3,200 per ounce, silver could surge to $66 per ounce, a level we've never seen before. This is a moment of immense potential. Historically, when the silver-to-gold ratio breaks out, it has triggered explosive rallies in both metals. This happened during the legendary bull markets of 1980 and 2011, where silver led the charge, significantly outperforming gold. But there's more. Oliver emphasizes that if the ratio crosses 1.3%, silver could unleash what he calls momentum-driven growth. This technical breakout would signal that silver is ready to outperform gold by a wide margin. Investors take note. Silver isn't just climbing back to normal. It could far exceed its historical performance. Why is this important? Precious metals have long been a safe haven for investors, particularly in times of economic uncertainty. Silver's current undervaluation makes it a prime candidate for those looking to diversify their portfolios or hedge against inflation. The message is clear. The silver market is heating up, and the window of opportunity may be narrowing. As Oliver notes, we could be witnessing the start of a new chapter for silver, one that investors will not want to ignore.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
Central bank digital currencies, that is, it's a way to enslave the population. For instance, the conversation you and I are having today would get our accounts shut off. And they have the ability to do that with a central bank digital currency. So it's important to not have, to have something other than a digital currency that you'll be able to rely on, use, spend, trade. Just understand that with gold and silver, they cannot bankrupt. And the problem today is the world is going through a bankruptcy. And when all is said and done, we're going to look back and say, holy cow, governments went bankrupt and took the value of currencies with the bankruptcy of the governments. So the whole theory behind gold and silver, they're the only monies on the planet that cannot bankrupt in a bankrupting world. There's no question China has far more gold than what they officially say. I mean, I could have 5 years ago, I could have shown you on the back of a napkin that China had over 25,000 tons. Just look at what they imported year after year, plus the 400 tons per year that they mine that does not leave the country. I mean, they are the biggest holder of gold in the world. No ifs, ands, or buts about it. And we talked about currency being backed but not convertible. That's the equivalent of the woman who walks into the ballroom with this big, gigantic, beautiful necklace. Everybody looks at it and adores it. And that's what happens with currencies. Countries, individuals, again, we're talking about confidence. And he who has the gold makes the rules. They all of a sudden come forth and say, look, here's how much gold we have. Show us how much gold you have. And then the Western nations, don't have even close to what they've accumulated. I did this math. I'm thinking it was maybe 4 or 5 years ago when the U.S. Debt was 23 trillion. I did the math, and if you took the amount of gold that the U.S. claims that we have, the 8,300 tons, and you divided it into the debt at the time, gold would have to be $125,000 per ounce to pay off our national debt. So here we are, the debt now is, 50% higher. So now you're talking of a number, a couple $100,000 per ounce, and that's assuming we actually have the gold. And I wouldn't assume that. The way I see it is in a system down scenario, you were going to get to the most basic of basics. And the most basic of basics is silver coin. And in the U.S., it would be junk silver because it's the smallest denomination of silver. I just think that once this thing goes belly up, and again, whether it's 2 weeks or 2 months or 6 months or God forbid more than that, the financial system is running headfirst into a brick wall. And when I say headfirst into a brick wall, because they've raised interest rates, the debt service, and just look at the U.S. Treasury. The U.S. Treasury now is approaching $1 trillion a year in debt service. Where do they get that $1 trillion a year from? Especially during bad times if tax revenues are declining. So they're going to have a system that's up and running, and you have a system that looks like it's running directly into a financial implosion where literally everything paper is worth nothing. And that leads to the last thing, it leads to confidence. Now, yes, an implosion, you're going to have some people say to the government, please save me. And then you're going to have other people that are self-sufficient and have a clue as to what has happened. They're going to say, piss on you. So this is not going to be as easy or as simple to put a digital currency in place. Because, think about the heartland of America. Do you really believe that they're going to take and use digital currency or their phones for every transaction? I don't think so. The de-dollarization process, without a doubt, has already started. Now, the only reports that I've seen where they're going to announce a currency, a gold-backed currency, came from RT. It's not been confirmed by China. It's not been confirmed by Russia. It came from RT News. And you do have to admit, RT has been a better news source than any of the mainstream media. Now, that said, my guess is they will talk about a currency. They may or may not mention gold. I believe they will mention commodities. In other words, hard assets as backing for the currency. And what I think is going to happen is what happened with the euro originally. If you remember back before the year 2000, the euro was strictly a digital currency. It was used for trade settlement and only used between nations. And then, 2003 or 4, I can't remember. But then they actually came out with currency notes, and all of the countries switched all of their local currencies into euros, and thus it began. And I think that's the model probably that the Brics are going to use. Initially, it will just be a digital currency used between nations strictly to settle trade. And at a later date, it could be a year from now, it could be 5 years, could be 7 or 10 years from now, there will be Brics, a Brics currency that's used in the streets. Now, whether that's digital or paper, I don't know. I suspect they're going to want to do digital too because, they're governments and they want to control the people just like the Western governments do. It's all about confidence. Currency has always been about confidence. And you mentioned, the Brics, you got these bad eggs in a basket. Those bad eggs in a basket are far better than a basket with the egg that's broken, and the egg that's been a thief and a bully all over the world for the last 50 years. Yeah. So, it's an alternative, and it's a cleaner.
We bring you a critical analysis from renowned economist Bill Holter, who sheds light on the precarious state of the global financial system. If you're an investor or someone keeping a close eye on economic developments, this is a conversation you don't want to miss. Let's dive into the details. Bill Holter begins by addressing a growing concern in modern financial systems: the increasing push for central bank digital currencies, or CBDCs. He describes these digital currencies as potential tools for government control, warning that such systems could suppress dissent by shutting off accounts and restricting financial freedoms. The solution, he emphasizes, lies in diversifying with assets that governments cannot control, gold and silver. But the real story goes far deeper. According to Holter, the world is heading toward a financial reckoning. Governments globally are drowning in debt, and many are nearing insolvency. This unprecedented level of fiscal mismanagement, he predicts, will lead to a massive wave of bankruptcies. When this occurs, fiat currencies, already fragile, will collapse under the weight of their own systems. And when we look back, Holter suggests, we'll see the fallout as governments dragging their currencies down with them. Holter's key argument centers around gold and silver as the only true monies immune to bankruptcy. Unlike fiat currencies, these precious metals hold intrinsic value. In his words, in a bankrupting world, gold and silver cannot go bankrupt. It's a stark reminder for investors to reconsider the role of tangible assets in their portfolios. Now, let's turn our focus to China, which Holter identifies as a major player in this evolving story. While official figures suggest modest gold reserves, Holter estimates that China has quietly amassed over 25,000 tons of gold. This makes them the largest holder of gold in the world. How did they achieve this? by strategically mining over 400 tons of gold annually, gold that never leaves their borders, and importing vast quantities year after year. This positioning gives China a powerful hand as the global economic order shifts. Holter also examines what these developments mean for gold prices. He calculates that if the U.S. were to pay off its $33 trillion national debt using its claimed gold reserves of 8,300 tons, gold would need to be priced at a jaw-dropping $200,000 per ounce. And that's assuming the U.S. actually holds the gold it claims, a question that remains shrouded in mystery. For context, just a few years ago, Holter estimated gold would need to reach $125,000 per ounce. The ballooning debt has only pushed these numbers higher, reflecting the dire fiscal state of the nation. But what about the future of global currencies? Holter points to the Brics nations as a key force reshaping the monetary landscape. He predicts they may follow a phased approach, introducing a digital trade currency similar to how the euro was initially used for trade settlements before physical currency notes were introduced. This digital currency, likely backed by commodities and possibly gold, could challenge the dominance of the US dollar in global trade. Holter wraps up with a stark warning about the financial system as a whole. He compares it to a train hurtling headfirst into a brick wall. Rising interest rates are making debt service unsustainable, with the U.S. Treasury alone approaching $1 trillion in annual debt payments. As tax revenues decline during economic downturns, the system becomes even more precarious. In such a scenario, confidence in paper currencies erodes rapidly. And that brings us to his final takeaway. In times of crisis, people will gravitate toward the basics. For Holter, that means silver coins and junk silver, tangible, reliable forms of currency that retain value when everything else collapses. So, what's the bottom line for investors? Holter urges us to prepare now. Confidence in fiat currencies is fading, and the de-dollarization process is already underway. Nations and individuals are looking to secure their wealth with hard assets. As Holter famously says, "He who has the gold makes the rules." That's all for tonight from the Economy Express channel. Stay tuned for more expert insights and breaking developments in the world of finance. As always, we're here to keep you ahead of the curve. Thank you for joining us, and we'll see you next time.